Asian buyers have learned not to chase price into this month end options, OCC bet squaring, and they seek to fill spot and golds and silver into all these dips. So here we are again, and nothing has changed following the what I call helpful speculator consolidation rinse. We, along with every first-year liquidity provider maker, is gearing up for a minimum $4,000 price, with actually an expectation of 4,500 will easily be achieved. So really, guys, there's only one question remaining, and that is to protect your wealth. How much physical gold and silver do you own right now?
Central banks continued their steady accumulation of gold in the first quarter of 2025, maintaining a trend that has become increasingly strategic amid shifting geopolitical and economic conditions. According to data from the World Gold Council, official net gold purchases totaled 244 tons in Q1. While this represents a 21% decline compared to the same quarter in 2024, 310 tons, it remains 25% above the 5-year quarterly average, demonstrating that central banks are still heavily investing in the metal. As the council noted, gold buying remained comfortably within the quarterly range of the last 3 years, suggesting a continued appetite for safe haven assets in a volatile environment. The People's Bank of China added 13 tons of gold in Q1 2025, bringing its official holdings to 2,292 tons, 6.5% of total reserves. However, analyst Andrew Maguire believes China's true gold reserves are much higher and could surpass those of the U.S., whose unaudited reserves may have been rehypothecated, raising doubts about their integrity. Supporting this view, respected gold researcher Jan Nieuwenhuis reports that the Chinese central bank has secretly stockpiled gold off the books. According to his analysis, the PBOC is likely holding more than 5,000 tons of monetary gold in Beijing, more than twice the publicly disclosed amount. These hidden reserves could have profound implications for the global monetary system, potentially reshaping the balance of power in international finance. The strategic implications of this gold accumulation extend beyond China. In recent years, nations like Russia and Iran have also increased their gold holdings while actively working to reduce dependence on the US dollar in global trade. Andrew Maguire highlights that former President Donald Trump once claimed that one phone call could bring nations back to using the dollar. Yet this notion appears increasingly outdated as U.S. sanctions and the weaponization of the dollar have encouraged key commodity-producing countries to explore and adopt alternative settlement systems. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
China is openly talking gold higher. It's so obvious. And it used to be hidden, used to be stealthy, no longer. Following Trump's comment, he said, "Who has the gold makes the rules." Well, that was a tweet. That if the financial war does escalate and/or a military war ensues, and that is plausible, even if it's a proxy war, Trump's comments may grossly backfire. China's nuclear option would be to reveal the real extent of their unencumbered PBOC gold holdings, dwarfing the unaudited, likely rehypothecated US Treasury gold holdings. And as we discussed in detail last time, and still missed by the mainstream media, I haven't seen it anywhere with other market commentators. As the US-China trade war risks escalating into a once-in-a-century financial war, China's anchored BRICS payment chains are rapidly onshoring, providing sufficient liquidity to also digitize. And as we talked about it last time, I re-raised it. Glasgow, fully beta-tested BRICS-facing gold-backed commodity currency is on the front burner. And while not formally named yet, it'll probably be part of the suite of the Russian messaging system and likely be called the digital ruble. Now, our Asian liquidity providers figure this will ultimately result in a global gold price quoted in RMB, because that is where the main links are, forcing the local London AM and PM dollar fixes to quote these prices ultimately. This is very big news. It means de-dollarization in a big way. It will completely reset the world order. So step by step, China is really revealing its very strong hand, following opening up gold futures trading to Chinese citizens and institutionals. We've looked at it multiple times. On the 1st of March, exactly 6 months later, in October, the PBOC opened up foreign firms to be able to trade industrial metals on the Shanghai Futures Exchange, undermining the pricing power of the LME. Now, exactly 6 months later, and 1 year after opening up the Shanghai Futures Exchange gold futures trading domestically, the PBOC is moving to open up Shanghai gold market overseas warehouses to enable gold settlement of gold and silver and platinum, shifting the market sway from the West to China. This is the final leg of them putting this whole strategy together. Trump has attempted to push back, threatening any nation that trades outside the dollar. Now he said, heard the phone call, or I heard the tweet. One phone call and they'll be back on the dollar is what he said. However, look, with the dollar already weaponized against China, Russia, and Iran, and given that the sudden expansion of tariffs equals sanctions, and these nations control the lion's share of global commodities, the US has very little additional leverage over China and Russia's expansion of their alternate non-dollar settlements. And to sum up, what we're witnessing is a major de-dollarization move that is seemingly or probably deliberately ignored by the mainstream media and official channels. Maybe they don't understand it. It's being ignored that the PBOC announced its digital RMB, and it's already been connected to. This is why it's amazing that it's ignored. It's been connected to 10 Asian and 6 Middle Eastern countries. That's already facilitating 38% of global trade that is able to bypass the weaponized SWIFT payment chain. Unbelievable this is ignored. And while the United States is still debating whether digital currencies threaten the status of the US dollar, which they don't, in my view, 87% of nations, that's 200 countries, have already adopted the digital RMB. Cross-border payments have already exceeded 1.4 trillion US dollars and growing. And while this scope of RMB settlements are limited, they are growing. However, add in the ability to digitize Glazjev's gold-backed stablecoin as a 7-second ruble settlement currency, these volumes are about to exponentially explode.
Gold was trading around $3,262 on Friday, breaking a 3-day losing streak as markets reacted to fresh optimism around easing trade tensions. Earlier in the week, headlines focused on tariff relief primarily drove the brief correction. Among them were executive orders signed by U.S. President Donald Trump to support the automotive sector. However, the primary catalyst behind Friday's rebound was a Bloomberg report indicating that China is considering re-engaging with the U.S. administration on a potential trade agreement. While the recent pullback suggests that gold's rally may be temporarily stalling, a sharp return to the all-time high of $3,500 seems unlikely in the near term. Nonetheless, the possibility of a tail risk event, such as a sudden geopolitical or financial shock, remains very much in play. This ongoing uncertainty continues to drive interest in gold as a strategic hedge. Andrew Maguire points out that liquidity providers and market makers are already positioning for much higher gold prices. He said the next leg up could take gold to at least $4,000, with $4,500 well within reach. In light of these developments, Maguire raises a critical question for investors. How much physical gold and silver do you own today to safeguard your wealth? As global tensions fluctuate and central banks maintain their gold-buying momentum, the metal remains a cornerstone of financial security in an increasingly unstable world. Let's get back to the interview.
I'm just going to highlight some of the most bullish for gold bullet points that really underscore why the gap between the paper and the physical markets will close thousands of dollars higher. These on the top, what I'm basically saying is when we meet with our liquidity providers, the first-tier liquidity providers, these other bullet points, they always come up. These are on the top of the list. So the first one that comes to mind is the major difference between how Western cash-settled, heavily leveraged COMEX futures markets discover prices versus Chinese and BRICS-facing exchanges, which I will underscore require physical bars to be first purchased. Well, which is the correct price? What do you think is the correct price? If I own a physical bar, I have to own it before I can sell it. Whereas a COMEX trader doesn't even have to have more than 4% of skin in the game, and is just tracking a price. So, in other words, not only do I have to own it, it's assigned to me, and before I offer it, the result is a real physical supply-demand price, settlement price. It's being determined, and there are no haircuts there. So the other thing that comes to mind is, as Basel III compliant global fixes are now NSFR compliant, and they're forced to be deliverable, any discrepancy between the COMEX generated paper market price and the physical price is immediately being alchemized. Hence, the ever-tightening Asia buys, West sells, noose tightening on the mispriced Western markets. They'll sit back like they at the end of every month. They know that the Fed has borrowed from the BIS. They know those positions get settled. We've tracked them month by month by month since the 1st of March 2024. Each and every month, it's been settled higher. So I guess really the other thing that, again, one of the other things that comes up for this discussion is, after buying mining assets around the world over the past 2 decades to secure metals needed for industrialization, and more recently to meet their carbon emission targets, China now wants a bigger say, naturally, in how prices of those metals are simply determined. So the Shanghai Futures Exchange benchmarks will eliminate the need for Chinese firms to link their physical contracts to the COMEX and LME prices. And what this is doing is creating a need for foreigners to trade on the Shanghai Futures Exchange to influence reference prices of their contracts. And that, again, shifts the market sway from West to China. So really, this is another thing that comes up. We're talking about the Sun Tzu style of China strategically amassing bargaining chips. China is eyeing the new links and nodes to deepen its long-term global competitiveness while the West sleeps. And another thing, as we looked at recently, the PBOC has stepped up efforts to counter tariffs, and in particular, you've got Southeast Asia supply chains that they're addressing: Vietnam, Cambodia, Laos, Burma, into which Beijing has foreign direct investments. There's no question Asian nations will have to act in a strategically multilateral manner. That's what is happening. And on the military front, this is really interesting. China has just blindsided the West with the development of a non-nuclear hydrogen bomb, which is no uranium, no plutonium. It's just a chemical engineering compound solution, easily manufactured. And this is a shot across the US bow, and underscores that a financial war may lead into a proxy war. In other words, perhaps it's time to exercise military supremacy versus reconciliation. So really, where's this balance shifting? All of the pieces of the multipolar, multinodal puzzle are really concatenating ahead of the confluence of the July 1st Basel III US compliance. And the BRICS July Rio Summit also concatenates exactly at that time, which is seeking to hedge and overcome the threat. And that's on the subject of $150% tariff on BRICS members, which have been threatened. So all of this comes together on the 1st of July.
As the geopolitical landscape continues to shift and traditional financial systems face renewed scrutiny, global monetary authorities' sustained interest in gold underscores its evolving role as more than just a hedge. It's becoming a core pillar of long-term financial strategy. Recent accumulation patterns suggest that key nations quietly prepare for a future where economic alliances and settlement frameworks may differ. While gold prices may experience short-term turbulence in reaction to diplomatic developments or policy shifts, the metal's foundational strength remains intact. This backdrop raises critical considerations for individual and institutional portfolios amid growing currency and credit system risks. Is the world quietly moving toward a gold-backed financial reset? And are you positioned to benefit if it unfolds? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.